Welcome back to the Dividend Diplomats YouTube channel. Triple L, Bert the Hurt, get ready, get excited. The long-awaited dividend stock analysis that you, the commenters, have been asking for is finally here.
Before we dive into the stock watch list or this stock analysis, smash that subscribe button, give your boy Bert and Lanny a nice thumbs up, and don't forget to check out the Dividend Diplomats on sale for your holiday gift giving. But this is a stock that all the commenters for the last year have been asking for. Bert.
How many commenters, Lanny? The millions?
Now one. Oh,
I was going there.
Say it again.
All right, let's take a break. Ready? Take two. Lanny, how many commenters have been asking for it?
For the millions and millions of viewers and dividend investors out there, we are talking about none other than the one and only, the legendary, the iconic, the showstopper, Carrier Global Corp.
Ticker symbol CARR. You know who you are out there that has been requested the Carrier video, and trust us, we promise you we did not forget him. We had him on our list of stocks to analyze, and you know what? We had our coffee from our Dividend Diplomats coffee mugs sold in the Dividend Diplomat store below. And we were just like, you know what, let's do it. We'll pull back the metric, go to their website, go to their recent earnings release. Let's do it. Everybody, we are going to look at Carrier Corp. We're going to talk about their recent business moves. We're going to talk about some acquisitions. We're going to review their earnings release. And then what are we going to do last, Lanny?
We're going to drink coffee.
We're always going to drink coffee. We're going to run them through the Dividend Diplomats Dividend Stock Screener.
Yes, which is focused on 3 dividend stock metrics. 1 being the price to earnings ratio, 2 being the dividend payout ratio, 3 your dividend growth rate, and that bonus metric, the dividend yield.
So get ready. So let's talk a little bit about Carrier here. They don't have the world's longest trading history. Why is that, Lanny?
Well, because they were previously owned by United Technologies. Ticker symbol, I believe, was UTX.
Yeah. But don't let that short trading history fool you. They are one of the oldest HVAC companies. They were one of the OGs of the cooling industry. They helped revolutionize this in the 1800s and grow their products until they were acquired by UTC in the 70s. So this company has been around for a while. They are one of the major players to help now residents, commercials, and even commercial trucking. That is the main sector to which Carrier plays.
And then for those who are curious about United Technologies, they were previously acquired by Raytheon. So there was a lot of things that happened in 2020. First, the 2 pieces. Raytheon acquired UTX. There was a divestiture of Carrier Global Corp.
Yeah, it's kind of funny when you start peeling back. You're like, this company has been around longer than just a year and a half. And then it's just a very funny history, one that is a lot of acquiring and divesting in a very short period of time.
So Carrier Global Corp was owned for 41 years. Now they're public on their own. Ticker symbol is CAR with a double R.
Yeah, but Lanny, so now that they're on their own, now they're public, now they're focusing on their core business, are they staying quiet themselves?
No, I can't even keep up with the amount of news releases that Carrier Global Corp has because they're spinning off, they're acquiring, they're divesting, they're doing it almost on a weekly, monthly basis. But what were some of the most recent acquisitions, Bert?
Yeah, so they acquired Enlight software. Thank you. I was struggling with that one. They are a data infrastructure management software, and they also acquired Broker Bay too, a digital real estate solutions provider.
And then one of their divestitures in the fire alarm and security is Chubb Fire and Security. They actually, I think, sold that business off to a company named API.
Yeah. So let's think through this, what they're doing. Now that they're on their own, they're getting rid of that old legacy fire business and security business, and now they're getting ready for the digital revolution to see how that's going to impact and tie into their residential HVAC. So it's going to be interesting, especially because a lot of room in the smart homes, a lot of businesses to help make energy as efficient as possible. Let's see if that's where Carrier's taking these acquisitions.
Yeah, so Carrier is a big player in your home and business. They provide a lot of HVAC, fire and alarm items, refrigeration. Some of the big brands is Bryant. You probably could look at your fire alarm or your smoke detector, carbon monoxide detector. They own the KIDDE brand. Yeah, they call it the Kitty brand.
Yeah, let's not forget Carrier too.
Carrier,
yeah,
the name Carrier.
So,
very big player, and especially in the housing boom that has been happening. Obviously, they were very busy.
Yeah, and that's reflected in their recent earnings release. Their last quarterly earnings were presented at the end of July, so we're going to have another round of quarterly earnings coming up here at the end of October.
How did Carrier perform in that second quarter earnings?
Absolutely crushed it. Strong earnings growth. Their sales were $5.4 billion, up 37% compared to last year, and it was worth noting that 31% of the growth was organic too. So they continued to crush it, and what I loved even more when we started looking at the earnings release, they increased their outlook, which means this isn't a flash in the pan great quarter. It's sustained. Their full year sales growth outlook is going to be up 14 to 16%. Earnings are going to be in the range of 210 to 220, and then their expected free cash flow for the year is going to be 1.9 billion. Yeah, it's good stuff.
Wow. All right. So for all you commenters, okay, kind of see what you're talking about. Carrier might not be a bad stock to buy, but we need to do one thing.
We got to figure out, are they actually a stock to buy?
So we're going to put them through the Dividend Diplomat stock screener. So Carrier, at the end of October 15th, which is the stock price date we're using for Carrier Global, their stock price was $53.43. So going into that first Dividend Diplomat stock screener metric of the price to earnings ratio, analysts and according to management, $2.20 is kind of like the top end of the estimate. So that price to earnings ratio, stock price divided by forward earnings, is looking at 24.29.
Yeah, so even then, if you take the low end of management's range here with the EPS of 210, that gives you a PE ratio of 25 as well. So not the cheapest stock by any stretch of the means. It's below the S&P 500, so it's not cheap. We've talked about in our previous watch list, we've had some single-digit stocks, some that are in the low teen. So yeah, it's interesting. They're not the cheapest.
But let's see what the dividend payout ratio looks like.
Yeah, so we always look for a dividend payout ratio less than 60% because that gives management plenty of room to continue growing its dividend and maintaining a safe dividend. Their annual dividend is 48 cents. Divide that by the 220, that gives you a very, very low payout ratio of 21.82%.
Extremely low, reinvesting, acquiring a lot of money that's left over to grow the business, still giving some back to shareholders. So with the low dividend payout ratio, you may assume two things. You better have a high growth rate and probably a lower yield.
That third metric here, so they've increased their dividend every year since they've been public,
Wow.
which was last year, so it's at 1. So, but tell us about UTX's history, Lanny. Were they increasing their dividend prior to the spinoff?
They did it a couple of years.
They
were a dividend aristocrat.
That's way more than a couple.
Cranking it out year after year after year after year.
Feed us those dividend increases.
Dogs got to eat. Cleveland Browns fans, give this video a thumbs up. Let's go.
So we can't say Carrier has a history of increasing dividends, but they've done it every year since they've been public. That being said, they came from a management team that has a long-term track record of increasing dividend. We like to see long-term stable companies. Carrier's been around from the 1800s. And on top of that, look at their results. Growing sales, growing earnings, growing cash flow, low payout ratio. The table is set for a sustainable growing dividend for years to come.
And come this December, you may get another dividend increase.
We'll find out soon. Interesting. Well, let's talk about that bonus metric, the dividend yield. 48 cents annual dividend, divide that by 53.43, that yield is 0.9%.
Ooh, almost 2 times your Ally, Goldman, American Express, Capital One.
But below the broader market.
Yes, below the S&P 500. Obviously, that dividend growth that you forgot to mention, they grew their dividend last year by 50%.
That's fair. I did forget to mention that. So
the question is, they could probably increase it by another 50% if they so wanted to. Say if they currently pay a 12-cent per quarter dividend and went from 12 to 18 cents, that payout ratio would still be below 40%.
And their yield would be closer to 1.4% at that
closer
point.
to the S&P 500.
Yeah, we'll see.
Is this a sneak preview of December? Will Carrier Global go from 12 to 18 cents per quarter?
Well, we'll find out. All right,
will.
so let's summarize here before we get to our final thoughts on Carrier. PE ratio 24, very low dividend payout ratio of just over 20%. They've increased their dividend every year since they were public, but UTX has a long-term growth history to which we'll see if they can sustain going forward, and their current dividend yield is 0.9%.
Now the stock price has just jumped this year, up over 44% year to date, up over 60% from the last year essentially. So the stock has been on fire lately.
So here's the million-dollar question. You're right, the stock price has been on fire lately. So are we going to be buying? Are we going to be buying Carrier? What are we going to be doing with this stock? I know for me personally, the answer is no. I'm not going to be on. Their PE ratio is a little too high. I'm liking the metrics though. Outside of it, I love their dividend growth potential. I love their earnings growth. I love how they're performing and what they're doing going forward. It's just a little expensive for my taste for the current yield that you are getting.
Yeah, I'm going to pass for now. I'll be paying attention to them the next 2 quarters. Do want to see what they do in December. I have to dive in a little bit deeper on their dividend kind of policy to see if they have a range that they want to be in it from a management and board of directors standpoint. They've had a big run up in stock price, so that's something to be cognizant of. I think it is a little pricey right now in the market, so I'm going to pass.
Yeah. So let us know, everybody. What are you going to be doing with Carrier? Are you going to be buying, watching, or passing? Is there anything you think we missed in this analysis that you want to inform us about Carrier? Do you use their air conditioning at your house too? Are you a user of their products, or have you gone elsewhere too? I think that's also going to be useful insight too as people assess this company.
Guys, we appreciate the mention. Obviously, keep the dividend stock tickers coming because, again, we'll keep adding them to the list of videos that we will record. It may take some time to get to those videos, but we will get them in. Again, that was Carrier Corp. Ticker symbol CARR. Metrics are okay. High performing company, high growth company.
Yeah. You want to send us off here, Lanny?
That was Bert, and this is Lanny. But before we do, give this video a thumbs up, subscribe to our channel. But this was the Dividend Diplomats.
Over and out.